All right, welcome back, everyone. Ready for another deep dive. Today, we're all about getting you an edge in the stock market. And you know how we do that here?
By digging into the nitty-gritty.
Exactly. And today's nitty-gritty, something called breakaway gaps. Those patterns that can sometimes, not always, but sometimes, signal a big move is coming.
It's like a little sneak peek into the future of a stock, maybe.
Okay, so we need to break this down. We're pulling insights from this article. It's called Breakaway Gaps, a powerful but cautious entry strategy. Quite a mouthful.
Catchy though, right? Gets a point across.
It does. So by the end of this, you'll know if these gaps are worth the hype, how to spot them, and most importantly,
How to trade them, if you decide they fit your style, of course.
absolutely, always got to emphasize that. So first things first, what is a breakaway gap? Paint us a picture. Charts, candlesticks, all that jazz.
All right, so you're looking at your chart, right? You see those familiar candlestick patterns, up, down, little wicks, all that. A breakaway gap. It just ignores all that. Sudden jump, price goes way up, leaves a literal gap from where it was trading the day before.
Visually striking, I bet. It's like that stock saying, hey, everyone, look at me.
Pretty much. And it usually happens for a reason, not just random. Think about Zoom back in, what was it, 2020?
The Zoom boom. Yep.
Their stock was gapping up all over the place because demand was through the roof. That's what gets us excited as traders, those moments when something's changing, market sentiment, a company's prospects, anything like that.
Makes sense.
Yeah.
Gotta catch that wave early.
Yeah.
But how do we tell a real breakaway gap from just a random blip? Asking for a friend, obviously.
Of course, of course. Well, there are a few key things. First, that price gap can't be tiny, needs to be noticeable, a jump above where it's been trading lately. Second, and this is huge, volume.
Volume, right? The number of shares traded.
Yep. It's like the fuel behind a rocket launch. If there's not enough fuel, that rocket's not going anywhere.
So a breakaway gap without volume is like a dud firework.
Exactly. Needs that explosive power. You want to see volume 2, 3 times higher than average. That's when you know the big players are getting involved.
That makes sense. Gotta have the big money backing it up.
Oh.
Okay, so we found this gap. Volume's good. We're excited. Do we just buy the stock? YOLO it.
Whoa there, cowboy. Hold your horses. Enthusiasm is great, but every strategy needs discipline, right?
Right. So walk us through this. What's the smart approach?
Well, the article lays out this 4-step guide. Pretty handy. And it all starts with timing.
Timing, the eternal struggle of the trader. Spill the beans. What's this all about?
So step 1, you want to buy as close to the opening price as you can. Catch that initial surge, ride the wave.
Okay, I'm in. What's next?
Now you got to be glued to the screen. Watch those first 5 minutes of trading. This is crucial.
5 minutes, huh? Why so specific?
It sets the tone for the day, basically. You want to see if the stock can hold those gains from the gap. If it does, the high of those 5 minutes, that becomes your new buy point.
I see. So it's not just about the gap itself, but how the stock behaves right after.
Exactly. And even then, gotta be careful, not chasing it forever. So step 3, we set a buy zone.
A buy zone. Sounds official. Lay it on me.
Basically, it's a limit you set above that new buy point, that 5-minute high. Article suggests 5%, so if your target's $100, you're looking to buy between there and $105 max. Past that, getting a bit risky.
Keeps us from getting caught up in the FOMO. Smart. And of course, we can't forget the final piece.
We've got to have that volume confirmation. Big gap, early buy, good price action, but without the volume, it's all suspect.
Like a beautiful cake with no frosting. Pretty to look at, but
Missing the best part. High volumes, the frosting tells you this move has legs. Institutions, smart money, they're the ones driving that volume up.
so to sum it up, we've got our big price gap, high volume accompanying it, then the 4 steps. Buy near the open, those first 5 minutes are key. The buy zone keeps us disciplined, and volume confirms it all.
Nailed it. But that's just the foundation, the what of breakaway gaps. To really get it, we got to dig into the why.
And that, my friends, is where we'll pick things up in the next part of our deep dive. All right, so we've established that breakaway gaps aren't just random things that happen. There's usually a reason behind them.
Right, got to be something sparking that initial excitement, that surge in buying interest. Otherwise,
Just a fluke, yeah. So if we want to trade these gaps smartly, we need to play detective a bit, figure out what's driving them.
Exactly. It's like putting together a puzzle, The gap's just one piece. The what? We need the why to see the whole picture.
And the article we've been talking about, it highlights some of these common whys, these catalysts.
Oh, yeah. News events, market sentiment shifts, even company-specific stuff can all play a role.
Speaking of company-specific, one of the biggest catalysts the article mentions is earnings surprises.
Oh, absolutely. Company blows past those earnings estimates. It's sending a signal loud and clear.
Like, hey, we're doing better than anyone thought. And investors love that
Look
feedback.
at it. Stock price goes up. Sometimes that's enough to trigger the whole breakaway gap.
Makes sense. But it's not always earnings, right? What else should we be watching for?
Product launches, those can be big, especially if it's something truly new, disruptive.
Imagine a groundbreaking new smartphone hits the market.
Yeah.
Everyone wants a piece of that action.
Exactly. That anticipation, the potential for huge growth, that can fuel a gap too.
So it's not just about how a company's doing now, but how it to do in the future.
Precisely. And then there's the whole industry side of things. Sometimes it's not just one company, but a whole sector shifting.
Okay, so what kind of industry shifts are we talking about here? Give us an example.
Sure. Imagine a new law gets passed, something that really benefits, let's say, the renewable energy sector, or some huge tech breakthrough happens, opens up tons of new possibilities.
Right, like suddenly AI is everywhere. Every company wants in on that action.
Boom. There's your catalyst. Multiple stocks could gap up because the whole landscapes change.
So we got to think big picture, not just the individual stock, but the whole industry, the context.
Exactly. A breakaway gap without that foundation, without a solid reason behind it, well,
It's like building a house on sand. Might look good for a bit, but
not gonna last. And speaking of things not lasting, remember that whole GameStop situation back in 2021?
oh yeah, the mother of all meme stock frenzies. That's got to be relevant to our discussion somehow.
It is GameStop. Perfect example of a hype-driven breakaway gap. Multiple gaps, one after another, driven by, social media, that whole short squeeze thing.
It was the ultimate FOMO stock. Everyone was afraid of missing out.
But here's the thing, those gaps weren't based on fundamentals. Not really. GameStop wasn't suddenly this amazing company overnight.
It was all speculation, pure hype, and we know how that usually ends.
Crash and burn. Lots of folks who bought in at those peak gap-up moments, they got burned bad.
It's a tough lesson, but an important one. Got to separate that emotion, the FOMO, from the logic.
Right, can't get so excited about the gap itself that we forget to look under the hood.
So big question for our listeners. Before you jump into any trade, especially one with a breakaway gap, ask yourself, is there substance behind it?
Is it driven by something real, something sustainable, or is it just hype that's going to fizzle out?
Great point.
Yeah.
Now, I want to shift gears a bit, talk about the more technical side of trading these gaps. We covered the four-step guide, but the article also talks about pullbacks.
Oh, pullbacks. They're a natural part of the market, even after a big move like a breakaway gap.
So it's like the stock takes a breather before continuing its climb.
Exactly. You stretch a rubber band, it's going to snap back a little before it can stretch further. Same idea.
Interesting analogy. So even if we miss that initial jump, there might be another chance to get in.
Right. A pullback can actually be a second entry point, sometimes even better than the first.
How so? What should we be looking for during a pullback?
Well, a controlled pullback, that's a good sign. Stock dips a bit but holds above certain levels, shows there's still buying interest.
Okay, so controlled is good. But what about a sharp, sudden drop? Red flag.
Could be. Especially if volume spikes on the sell side, that might mean the initial move wasn't that strong.
So we're watching both price and volume during the pullback, looking for clues.
Exactly. It's all about reading those signals, understanding what the market's telling us.
Okay, I think we've covered a lot here. Catalysts, hype traps, pullbacks. Man, there's a lot to these breakaway gaps.
Definitely a deep dive living up to the name.
Any final thoughts before we wrap up this part?
Just want to emphasize, breakaway gaps. Exciting? Yeah. Potentially profitable? Sure, but they're not a guaranteed win.
Right. There's no magic formula in trading, unfortunately. But knowledge and discipline, those are our best weapons.
Couldn't have said it better myself.
Well, we've certainly journeyed deep into the world of breakaway gaps, haven't we? Covered a lot of ground from spotting them on the charts.
To really understanding what they mean, what makes a good one versus one that's maybe just hype.
Exactly.
Yeah.
And of course, even after a gap, the story isn't over. Got to think about pullbacks, those second chances.
It's like, the market's always throwing us curveballs. Got to be ready for anything.
So let's do a quick recap for everyone and bring it all home. First off, the big question are breakaway gaps. Some sort of trading holy grail. A guaranteed ticket to riches.
Oh, definitely not. They can be powerful, but it's more like, think of it like you find a treasure map.
Oh, I like this analogy.
It shows you the potential path, but you still got to do the digging, the work to find out if there's actually treasure there.
So healthy skepticism is key.
Mm-hmm.
What should our listener be asking themselves when they see a gap? What's the first thought?
Validation for sure. Is this happening for the right reasons? Is there something real driving it? Like those strong earnings we talked about. Genuine innovation, a positive shift in the whole industry.
And then, even if the reason seems solid, we've got to remember those 4 steps. Buying near the open gets us in early.
But then it's all about those first 5 minutes, seeing if that price holds, sets our target.
But we're not chasing it to the moon. Got to have that 5% buy zone, keeps us grounded.
And of course, volume, can't stress that enough. If it's not significantly higher than usual, that gap's probably not worth our time.
Like a party with no music, something's missing.
Mm.
All right, time for our final thought. Ready? Imagine you're looking at your charts tomorrow morning and bam, there it is, a breakaway gap. What are the first 3 things you check?
Ooh, tough one. So much to consider. But for me, gotta start with news. What happened? Earnings report, product launch. Something's gotta be driving that action.
Makes sense. Got to know the why. What's next?
Quick peek at the company's financials. Gotta make sure they're fundamentally sound. Can back up that price move.
Love it. And of course, can't forget.
Volume. Gotta see that confirmation that big money's flowing in, not just a little blip.
Perfect. That sums it up beautifully. Trading, especially around these exciting patterns, it's part art, part science, wouldn't you say?
Absolutely. Got to have that analytical mind, but also the intuition, that gut feeling you develop over time.
And that, my friends, is what this deep dive's all about. Giving you the knowledge, the tools, the confidence to make those smart decisions. Keep learning, keep exploring, and until next time, happy trading, everyone.